Good morning, viewers, and welcome to the 20th episode of Your Money, Your Taxes. I'm Paresh Shah, CEO of Paresh Shah Financial Services, a full-service financial planning firm. With me in the studio today is Lalit Abichandani, owner of Abic CPA Associates. Lalitji is a CPA for the past 25 years. He specializes in US taxation. He runs a very successful CPA firm in New York. He and his firm provide tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm services IT, healthcare industry, hospitality and entertainment industry. He has done hundreds of offshore voluntary disclosure and streamlined procedure cases and has become an expert in foreign bank account reporting and the US-India tax treaty. He's a CPA and tax advisor to businesses, professionals, Bollywood industry and a lot of film personalities. His website is yourtaxadvisor.com. Welcome, Lalitji.
Thank you, Paresh Ji, and thank you very much for the great introduction.
It is my pleasure. So today I'm going to take a very interesting topic. It's all going to be about real estate. And we've talked about various topics of taxation for both personal as well as businesses. But real estate and tax saving in real estate, that seems to be a hot topic around. A lot of people telling me different things. Can you give me your thoughts on this, please?
Yeah, Paresh Ji, real estate, as you said, is the most popular form of investment. Everybody prefers that, and there are good reasons for that. There are a lot of tax advantages, and there are a lot of families who have benefited from this over the years. We all have heard these big names like Rockefeller or Donald Trump and similar families. So real estate investment comes with a lot of advantages, especially in this country. IRS has given a lot of credits and preferences over other investments.
That's great. But I would like to start at the foundation of real estate, which is buying the personal home. What is better, to buy a home or to rent it? Give me your opinion.
Paresh Ji, absolutely no question. Owning your own home is a better investment than renting and doing any other investment. And it has various different reasons. First of all, when you are renting, the rent that you pay, you have no deduction. You cannot take any deduction for the rental payment that you have made. As opposed to that, when you own your own home, you are allowed interest expenses for the mortgage as well as the real estate taxes that you are paying. That gets deducted as well, so that those alone are equivalent to rental payment, and you get a tax deduction on that. Besides that, when you take a mortgage, you are committed for the mortgage for 20 or 30 years. It's the same amount, whereas in renting, every year the rent goes up. So your commitment for the abode that you have is limited to the same amount every month for the next 20 years or so, except for minor real estate taxes if they go up. And the third most important part is that it's your own home. Nobody can throw you out. So those are the main reasons why you would want to own your own home and have tax savings as well.
Thank you, Lalit. I can really relate to when you say we own your own home and nobody can throw you out. Several years ago, when I migrated into this country, and we were new, but after we purchased our own home was the first time that we really felt that we belonged here. So I just think it's an inherent thing to feel part of it. But to go ahead with these tax benefits, when we purchase a new home, we sell an old home and purchase a new home, are there any additional tax benefits? Because I would assume that the gain is subject to capital gain.
So this is one of the largest tax benefit in this country. When you own your own home and you have lived in that own home as a personal residence for 2 years or more, and after that if you sell that, the first $500,000 is tax free. That is $250,000 for yourself and $250,000 for your spouse. So a gain of up to $500,000 is totally tax-free, and in New York State, it is tax-free at the federal level as well as at the state level. So it's a great advantage. If for no other reason, this reason alone qualifies for buying a home and investing in there and keep paying the mortgages and save taxes.
But then there must be some, like with all exemptions or things that the IRS gives, there must be some caveats, right? Like, say, for example, I have to reinvest the money that I got from selling the home or something like that. Is that something like
Absolutely not, Pareshji. That is a general misconception that people have, and that's the most asked questions all the time when people are selling their house. They ask me if they have to reinvest. There is no requirement to reinvest that money. You can sell the house, have a $500,000 of capital gain tax-free, and the entire amount you can go and invest somewhere else. There is no requirement to reinvest, which is a great benefit.
I agree with you 100%. $500,000, that's a lot of money. I mean, if you take that just 20, if you're in the 15% tax bracket, that's almost $75,000 of gains of taxes that you save if your gains are so much. But so that was about the personal home. Lalitji, can we go ahead and talk a little bit about investment properties and what are the tax advantages in that area?
Sure. Even in real estate investment, compared to other investment, real estate investment is a preferential treatment given to real estate, in that compared to other investment where you have interest, dividend, capital gain when you are investing in banks or in stock market, the entire gain or entire money income that you have gets taxed. There is no question. You get a 1099 and you have to pay taxes, versus when you have invested in a real estate and you're collecting rent, you get to deduct all of the expenses against that property. Not only just the interest and the real estate taxes you're paying, but all other miscellaneous expenses, maintenance, and other related expenses you can deduct from your rental income. In addition to that, there is also a depreciation that is allowed. That's about 3% depreciation that you get, which is not a real expense, but you do get a deduction from your rental income. So that's another advantage. So I would say that you earn more and pay less taxes on the same income. So definitely you have more advantage in investing in real estate compared to other investments.
That's amazing. I mean, to get so much benefit and earn money, that's amazing. So what you're saying is that you have an income, then you can take expenses, and then also on top of that depreciation, and that really adds up to give you substantial benefit. But what if there is a period when there is no cash flow because there is no rent? Can we still get some advantages from the property lying vacant for a period of time?
Absolutely, Pareshji. That's another area where there is no other investment where you can get this matching of up to $25,000 of loss you can deduct against your income. So just to give you an example, let's say if you're between husband and wife, you have $100,000 taxable income, and when you have an investment property, out of when you are spending money, your income for some reason is not equivalent to your expenses. Your expenses are $10,000 more than your income. Now this $10,000 loss you can write off against your $100,000 of income. So your net taxable income then is $90,000. So that write-off is up to $25,000, subject to certain limitation. But again, that's a huge tax savings. Even when you are not making money, the government is giving it away in terms of taxes.
That's pretty good, But let's go to the stage where I invested in a property. I got income for a certain period of time, and I took the depreciation and everything. And now I sell the property, and say I bought it at 200,000 and I sell it for 250,000. What is the treatment of that gain?
In this area, again, the government gives you a preference. So there are three categories in there. Let's say if your regular tax rate is between 0 and 15%, you pay no capital gain tax. Your capital gain tax is 0. If your taxable tax rate is from 25 to 35%, then you pay 15% capital gain. If you are in the highest tax bracket of 39.6%, the most you pay is 20% capital gain tax rate, which is far less than the normal ordinary income tax rates. So it definitely gives you a lot of advantages in investing in real estate and taking advantage of these laws in your favor.
That's pretty good, because I mean, all said and done, I mean, if you're getting tax advantages, let's take most people, they really take a long time to save up to buy their first home, and then now you have to save to buy the investment property also. I mean, doesn't it just become a big players game or a big money game, and these advantages are only for the rich? Doesn't it become that way, Lalitji?
Pareshji, this is one area where not only the government is giving you advantage, but even the banks are giving you advantage. So this is known as arbitrage, meaning that you put down 10% or 20% or 30%, and the remaining amount you can take as a loan. So if you're borrowing it for your personal residence, you can borrow as much as 90% of the value of the home. So you're only putting 10% down and buying personal residence. Or if you're doing investment property, then you have to put down 20-25%, in some cases 30%. So still 75 to 80% you can borrow from the bank and do the investment, and you get advantage on the entire amount. So if you have now invested, like you said, $200,000, and you have borrowed $180,000, you get the gain on the entire $200,000, because that's yours to keep.
Yeah, that's pretty cool. Like as you correctly pointed out, I can say, for example, if I do $200,000 in your own example, and I put only $20,000, but the gain is $250. That means my $20,000 grew to $70,000. You're not counting the leverage, which is the amount that you're talking about. That's pretty cool. That brings me to another area. Is borrowing. A lot of people get confused about this part. 15-year mortgage or 30-year mortgage. What should be done? What is your opinion about that?
Pareshji, this is something that you have to speak to your mortgage broker. They will guide you. Also, based on your income, they will tell you how much you can really afford to pay. My personal opinion is that you should try and get the least commitment, meaning if you spread the loan over to 30 years, your mortgage per month is lower. And along the way, if you are making more money and if you have available funds, then you can start paying that mortgage down, and you can pay it much faster. In terms of the fixed rate or variable rate, we are going through a very low interest rate environment. So I would again encourage people to go with the fixed rate for the longest period of time, so that they don't need to worry about increasing their commitments.
Well, Lalitji, we are going into running short on time, so I'm going to go into the last question. So what if just quickly, if you can tell us, investment property, should we purchase in personal names or in a corp, or what type of entity? Tell me your thoughts about that.
Pareshji, from a tax point of view, it really doesn't make much difference, but from a liability point of view, it makes a huge difference, because you are investing and renting it to people. So you have to cover your risk and get yourself insured properly. You understand insurance more than anybody else, so I would say get yourself an entity like a limited liability company, and as well as get proper insurances on that, so that it doesn't filter down to your personal liability on that.
That's correct, Lalitji. We in our very first one of the shows that we talked about property casualty insurance, and we did cover homeowners insurance at that time. Well, viewers, this has been some great information about all the tax benefits that home ownership and real estate ownership comes about. I would definitely recommend that if you're looking at real estate investment, consult your mortgage professional, but also consult Lalit ji. You can send him questions at lalitcpa@yourtaxadvisor.com, or go to his website yourtaxadvisor.com and call him on his phone. He'll be happy to give you a consultation, because there are complex parts and you may be missing out on deductions, or you may be missing out on ideas just because you did not know and can take advantage of this great investment opportunity. Thank you, Lalit ji. Really appreciate your time today for this show.
Thank you, Paresh ji. It was a pleasure.
And viewers, we'll meet you in 15 days again. Thank you.
See you next time.